Now, having our portfolio altcoin heavy is backwards. Right now, we're looking at total three, which is the total altcoin market minus Bitcoin. And it has been in a massive downtrend for a very long time, as you can see here throughout our last massive capitulation event in October. And this is about the worst capitulation event I've ever experienced when billions of dollars of leverage was liquidated out of the market. Now, in this video, I really want to break down for you why Bitcoin is still my foundation of my portfolio and how I think about it from a risk management perspective. It's also how I build my DeFi and my altcoin exposure around my Bitcoin holdings and what would actually change my mind in this market. Look, this is not a hype video. This is not Bitcoin or altcoins to the moon. This is a how around a little bit. Now, zooming out on the weekly chart, we look at the macro. Now, as you can see, Bitcoin is in a massive macro downtrend. As you can see from here, from the top of the range down to the bottom of the range, right? Bitcoin has totally broken slightly out of that downtrend. But macro speaking, Bitcoin makes the most sense. It is the base layer of my portfolio. It has the cleanest liquidity, the cleanest identity, the deepest liquidity, and at the same time, it has a strong long-term role in the crypto market. When we really zoom out and we look at multiple cycles, we can see that Bitcoin is in a massive uptrend. And look, I know a lot of people won't agree with me on this, but that's okay. And this is exactly why it matters and should matter to you. Thought that the Rave token would be an excellent case study to explain why this matters so much. Now, the Rave token came out less than a week ago and went up thousands of percent. But this token has rug pulled everybody. And again, this matters because people are thinking about this backwards. They start with the most exciting new token like Rave, the thing that has the highest upside story and potential. And later, they try to add in a little bit of safety. But look, this is how they get hurt. We are down almost 96%. It's crazy. This is why, for me, Bitcoin is not just another position. It is the majority of my portfolio. And it's the prime mistakes to become your information to keep you from experiencing the same pain that I have had in the past. So I would get out my notebook and take some notes over this next part. But we're going to discuss parts of my research framework and why Bitcoin earns the role of the foundation within my portfolio. So let's look at this, not emotionally, not politically, not because the Bitcoiners say so, just practically speaking. And it comes down to three things. One, liquidity. Two, simplicity. And three, clear portfolio role and behavior. So, number one is liquidity. Bitcoin still has the deepest liquidity and is the most durable asset within the crypto market. And liquidity is going to matter more than your opinion. It's going to matter more than the narrative. It's going to matter more than the pump. Liquidity matters because it's going to affect your durability, the execution of your trades, volatility, and how capital behaves under the stressful times in the market, which are the ones that really matter. Now, the simplicity is the second point. A lot of assets are going to need constant storytelling to justify their place in the market. Bitcoin doesn't really need that anymore. It doesn't really make it risk-free, but it makes it a cleaner asset, a cleaner trade. And cleaner does matter, especially during a bear market. And of course, Bitcoin has a clear portfolio role because how it behaves under pressure. I know exactly what Bitcoin is doing within my portfolio. And it's not there because it's the best return. It's there because it's my strongest crypto core position. And I can build something riskier and more selective around it to accumulate more Bitcoin. Bitcoin's job is not going to be the same as a DeFi, an LP, a base meme token, or any kind of smaller altcoin swing trade. But it's Bitcoin's behavior under my portfolio. Now, this last point isn't really part of the research, but it is rotation logic of how I approach altcoins. So I would much rather rotate outward from my Bitcoin than building inward from speculation, i.e., just cash out of my bank. The cleaner model usually looks like this. First, I invest in Bitcoin, and then selectively I start to accumulate, and then selective DeFi positions and tactical bets, such as mid cap and lower cap tokens. Now, this is a lot different than just chasing whatever is pumping that week. And I want to make everyone very aware the liquidity is usually lacking in a bear market. So trading smaller tokens gets more and more difficult, and you are much more likely to suffer losses or liquidations. And then finally, I want to discuss the trap. And here it is. The trap is a lot of people treat Bitcoin, it's just a boring asset. But truly, when we look at the Bitcoin Ethereum chart, you can see why this should not be underweight. Because Ethereum and altcoins have been bleeding back to Bitcoin pretty much for their entire existence. This chart has definitely been in a downtrend since here. People tend to underweight their Bitcoin exposure. They overweight weaker things trying to outperform Bitcoin. And what actually happens is they're taking on more risk for less returns and lower quality exposure than they're willing to admit to themselves. That's the trap. I've been guilty myself. So it's okay if you've been doing this. They think they're being aggressive and they're great traders, but really they're just being sloppy, structurally sloppy, no plan. It's not going to work. But here's another trap. People compare Bitcoin to altcoins during these short windows when the altcoins are exploding. They never compare it across a full cycle. Now, if you compare an altcoin across full cycles, all of them are bleeding back to Bitcoin. They do not compare as far as survivability. They don't compare as far as liquidity. And they definitely don't compare to the emotional wear and tear on your soul. That changes your plan and that changes your setup. So let's break this back down to all of our main points. First, Bitcoin is our core conviction play. It's the core layer of our portfolio, and it means it's the position I'm most comfortable building around over time. Not always because it moves first, it's not always because it's easy, but because when I zoom out, this makes the most sense. Now, my second reason is Bitcoin is going to be my defense in a messy market like the bear market is now. As you can see, Bitcoin is over 90% of my total portfolio allocation right now. What they often need is more Bitcoin, in my opinion, in their portfolio and more discipline with their strategies. And Bitcoin actually helps me to stay more disciplined than other weaker assets will. I'll get too much FOMO. So if conditions are unclear, I would rather hold more weight in Bitcoin and then force size into lower quality setups. Now, also, when I look at an altcoin, a DeFi position, or a yield setup, I will ask a simple question. Is this actually better than just holding more Bitcoin? Not just more exciting. It has to be better, risk adjusted returns. Does it justify the complexity, the volatility, the risk, etc.? If not, I don't need it. And that filter alone can help me save a lot of money. Now, Bitcoin is more intentional. And as a dad and as a teacher and someone trying to build this brand out in the public, that truly matters to me. Now, the next thing I want to talk about is liquidity. And it truly does matter. Liquidity does matter more than your own opinions. Narrative will attract attention, but liquidity will determine the durability of that asset. It's one of the bigger reasons Bitcoin stays front and center with me. A lot of assets can look strong, but they look strong in isolated bursts. And a lot of ecosystems can feel exciting when the incentives are flowing. A lot of tokens end up feeling like we're already in the future for 3 weeks, only to then rug pull from underneath you. So Bitcoin, though, is durable and that capital respects the liquidity. Bitcoin is not dependent on one app, one chain, or an admission program or some kind of short-term story or a bunch of KOLs shilling it to get momentum. That truly does matter. And this is why I keep coming back to this same principle, process over prediction. If I cannot predict it perfectly, I want to build around something that's structurally durable. And for me, that starts with Bitcoin. So if you want more of these real-time market thoughts and positional updates and what I'm regularly watching from day to day, please consider joining our free Telegram group and check out our webpage at DADSDEFISPACE.org. That's where I break all this stuff down. Now, let's talk a little bit about mistakes. I've made the mistake before, as I've said in the video earlier, of drifting too far away from my core position. I've chased the bigger upside. I've taken on weaker exposure, bad LP positions, memes I shouldn't have gotten into. It felt good in the moment. I felt smarter. Sometimes it paid off, many times it did not. Because really, that kind of trading style works until it doesn't. And I've learned that the hard way, especially early on, being in those weaker assets, and it can still cost a lot as far as your portfolio chaos and the actual dollar value. And it's honestly one of the biggest lessons I've taken going through 2 full cycles. It's not enough to find something that's interesting, it has to deserve my capital. That process matters so much more than my own ego, and it should for you too. And that's a huge one because your ego's saying, I don't want the boring winner. I don't want to be wrong. And it's okay to be wrong. This is all part of a learning process. The process is going to tell you, I want that asset because it gives you the strongest foundation to build the rest of my portfolio upon. So then in the future, I can take smart risk elsewhere. Look, I still like DeFi. I still like the base ecosystem. I still like farming on Solana. I still like that selective altcoin exposure, but I do not want any of that replacing my Bitcoin plays. Bitcoin is my foundation. DeFi and Web3 can amplify that. Now, what would weaken my view? Honestly, another asset would truly have to earn that long, strong portfolio role and be a harder asset than Bitcoin. Not because it pumped for a month, but because of deeper liquidity, stronger durability, and a structural role that exists. If Bitcoin stops functioning as the best market anchor, then I'd have to reassess my ideas. If the quality gap between Bitcoin and the rest of the market narrowed materially, I would have to reassess that also. And if my own portfolio goals change, I'd have to build that differently. But right now, I'm operating on what I value, and Bitcoin still makes the most sense to me. Tell me in the comments if you see the market differently, because I'd like to know what you see as the core of your portfolio. Now, we also, before the end, need to talk a little bit about downside risks. Bitcoin's not risk free. It's not. It can still push back hard. It will test your conviction. It can underperform during all burst. So it's not riskless. The risk a lot of times is misunderstood. Foundation doesn't mean no downside. It just means the strongest base, the strongest role, your best anchor. The best place, in my opinion, to start building from. This is very different than saying Bitcoin is easy because it's not. It's just cleaner. So when I say Bitcoin is still that foundation of my portfolio, and that it's the asset truly most anchored to my thinking, just as not just to stabilize my exposure, but to reduce my bad decisions, to help me rotate with more discipline, and to keep my portfolio connected in strength instead of noise. Mean I'm ignoring DeFi. Doesn't mean I'm ignoring ETH. Doesn't mean I'm ignoring the new L2s and Solana and all the other altcoins out there. But I think a lot of people are trying to maximize their upside before they build that stable base. That's completely backwards. So for me, Bitcoin still earns that first seat because structure matters more than my emotions and durability matters more than my excitement. So if you want more real-time market updates, trade thinking, DeFi positioning, join our free Telegram group. And if you want deeper crypto education, head over to DADSDEFISPACE.org. Check out our free resources and free course. And if you want to follow more of that, my market thoughts, check us out over on X at CryptoZone1013 too. Also, and if you truly want to support my work, check out our Dad's DeFi Space community across Zora, Base App, Paragraph, and even Farcaster. Please like this video if it helped a lot. Subscribe to the channel and comment below. Is Bitcoin the foundation of your portfolio, or do you treat it more like a trade? Let me know. Be sure to touch some grass outside today. And until next time, ladies and gentlemen, peace.